Hello and welcome to Fish Wrap TV, episode 19. Today is Friday, June 11th, 2021. I'm your host, Janie Hansen, here as usual with Q Lair for the market update this week. It's another hot one here in Blue Earth, a consistent week in weather, but a volatile one in the markets. In this episode, we'll be covering wheat, corn, soybeans, and inflation. The WASDE, which stands for World Agricultural Supply Demand Economics report, came out on Thursday. Q, any surprises there?
Actually, there was one surprise, which was the corn market, and they continue to take the corn carryout down, and wheat was relatively neutral. Soybeans were a little bit bearish. So what's happening is that some of these prices are beginning to work their way into the supply demand for the soybeans. But corn was a bit of a surprise, and it's got everybody in ag Twitter super excited. Especially with the super dry weather up in North Dakota.
Mm-hmm. So we'll go into detail on all three of those now, but let's get into wheat first. What's the story with the spring versus winter in the wheats?
Minneapolis continues to just punish anybody who's short it. And, we've talked about this for weeks, that if you ever get short protein in spring wheat, there's just no home. And this thing has gone from 20 under to $1.20 over in just no time.
Wow.
So it continues. Yeah, it's a huge turn. And the thing is, like I said, the last couple of weeks, I don't know where this thing can go. The only saving grace could very well be that if we get super dry weather in Kansas, we get some high protein coming out of the fields, we can blend that in, and then you got a home, perhaps. Mm-hmm. But it's going to be a heck of a year trading wheat. And we got some rain today, literally today in North Dakota. We'll do the postmortem on that and see how much they got. I know one guy around Fargo said he got 2 inches. Okay. Of course, we barely got a dusting here in Indiana, in Blue Earth. But it's really, it was spotty, but yet it was a large front that went, from Saskatchewan all the way down to, to the Ohio area. So, but we didn't get much here. Bummer for my tomatoes.
Mm-hmm. Yeah, we could use another drink. So how about corn?
Corn is continuing to stress. We put out a $5.50. We almost got a 4 in front of corn, not 10 sessions ago, back over $6 now. So it is extremely dangerous in the corn pit right now. And the volatility is screaming. People are just, they're taking no prisoners with some of these corn spreads. And with corn back over $6, now we're beginning to say, okay, what is going to happen with this thing? If we got 2 inches of rain like this in North Dakota, this could be over. Mm-hmm. But we'll see. But yet around here is pretty dry. But yet this is not the world. Our backyard is not the world. Mm-hmm. We've already pretty much worked all the numbers in from Brazil. We've gone from 109 million tons down to 88 now on the Brazil safrinha crop. Okay. So, that's what the market's thinking already, which is, 20% loss.
Okay, right, so that's what's keeping corn up there.
That's what's keeping corn up there. And people, keep seeing these numbers and they go, oh my God, why isn't corn up the limit? And the thing is that we know that corn is sitting out there at 88 million tons in safrinha. So we're just looking for new information. Mm-hmm. But at any rate, these corn hit 50% volatility, which we haven't seen, 7, 8, 9 years.
Yeah. Well, and then those margins keep going up.
Margins keep going up. We just got the notice today. Mm-hmm. Speaking of margins going up, bean spreads margins are going up.
Okay. So keeping life interesting. So, speaking of beans, what in the world happened with those July Nove bean spreads?
There's been levels of punishment, but I haven't seen this kind of punishment in a decade in the markets. July November bean spread has gone from 220, 225. Today hit 70 in about 5 sessions. I mean, they just took this stuff out to the woodshed. Yesterday alone, July Nove lost 30, lost another 20 today. So, I mean, it's gone from, 110, 120 to 70 in 2 sessions, 2 days. So margins are going up, but look at this. The July is 70 over November in the nearby. November 21, or Nove Red Nove 21 to 22 is $1.46. So in other words, November is higher than November 22, then July is over Nov, and it used to be the other way around. So if you had this the wrong way, get your checkbook out.
Yeah.
And there's some people who have had it the wrong way. So there was a joke. One of the biggest bean traders in the world was joking about July no going to even money. And a lot of people are saying, that's not funny.
Yeah. Don't get around with that, please.
Well, it moved, like I said, 50 cents in 2 days, a couple more of those, and it's going to be unders.
Yeah.
So it is a punishing market for the people who are wrong. And see, the thing is, if you remember, 13, 14, 15, 16, 17, 18, everybody got put to sleep. Remember 9% volatility in beans?
Yeah.
Forget that noise. I mean, they are just rocking and rolling with these. I think even the July, November bean spread volatility is probably 30%, 40%.
Yeah. Yeah. So don't fall asleep with that 9% caught on your heels for this 30.
Exactly. So, and of course, I was always telling you about who was always buying that volatility down there, just, traveling all around the world after it paid off.
The pros from Dover, as you say.
The pros from Dover, indeed. But that happened, and then soybean oil just got murdered today. I mean, killed. There's a rumor going around that the Biden administration is going to give flexibility on RINs. Now, what that means is that if you're a giant oil producer like Chevron or Exxon, you can ask for some flexibility in not having to use soybean oil in your mixtures and or ethanol, and they just punish the market. So we saw canola and bean oil just leading this thing, and that's always the danger because now
so that oil-led rally is dangerous, and now that oil is coming off.
Yes, so if they do allow flexibility with that, it's funny because they really punished the Trump administration for doing a bit of that, especially with Chevron. But now it looks like they're going to have to do it because they're just getting pressure from the big oil giants that they just are not going to deal with this. And like I said, remember what I was telling you, something's got to give with these things, and it looks like the politics is going to make it happen.
So and then crude, is that?
Crude broke through 70 bucks. I heard talk it's going to 100. If it does, I mean, it's curtains for the stock market. But 70 is starting to put pressure on things. We're starting to see cracks in the stock market. The S&Ps. We're starting to see huge reverse repos coming out of the Fed. We're talking $500 billion a day.
Really?
Reverse repos coming out of the Fed. I do not know what's going on, but it's not good, whatever it is. So I've heard.
What are those for those who haven't heard that term before?
What that does is the Fed is draining liquidity. So what they can do is they can force banks to sell them securities, and they give them cash, or it's the other way around. That's the reverse. So it's really about injecting liquidity or draining liquidity.
So they're pulling liquidity out.
They're pulling liquidity out.
Okay.
And there's rumors that another huge fund is down about $6 billion on the recent trades. So there's cannon fodder out there, and dead bodies, as we say it, on the street. From some of this market action. But
you're so sensitive in your trading analogies.
Well, if you've ever traded and watched like $1 million go like that, you would dig it too.
Yeah, that's some real pain.
It is real pain.
So with crude creeping up, what's happening with inflation?
We're starting to see some topping. I wouldn't call it topping action per se, but we're seeing the market rejecting some of these prices. Lumber broke down south of 1,200, which was a key area. So it's gone from 1,800 to 1,100. Of course, it's still up 500% from 200. Yeah. But it's still down. I mean, that just shows you how crazy this thing was. Hogs continue to just go. So it's apparent that the Chinese just don't care. They're just going to buy them. Okay. And they're trading substantially over cattle now. And this has got, meat Twitter at each other's throats. It's hilarious.
I've heard that one before.
Yeah. Well, it's not as big. Ag Twitter is like all of us.
Mm-hmm.
And meat Twitter, as you well know, you've met some of those,
yes.
those meat traders.
Mm-hmm.
That's a specifically crazy group of guys that are into that sort of thing. But it was, where this goes, nobody knows. Mm-hmm. But you've got these high prices, but you got high price corn. Starting to think about these inputs for next year. Yeah. What's the cost? The cost of production isn't going to be like $3.40 again for corn because your fertilizer is up at least 100%.
Yeah.
So some of these inputs are going to start costing you more. You got to start looking at those for your cost of production.
Yeah, running some of those scenarios.
Yes.
See where those numbers are at. So, well, any other things to think about or noteworthy items from this week?
The inflation numbers continue to accelerate. Okay. The talk in the street is it's at least 5% now. And, that is starting to really eat into a lot of things. And it's a lot of trouble. We've got used cars are now selling more than new cars. So we've seen a crash in new car sales. We're starting to see a crash in the distillates against this $70 crude. So, we're starting to see cracks in some of this bull market stuff and the bull market structure. And we'll keep our eye on it. But yet, we're in the midst of this. Mm-hmm. And there's been an absolute rejection of buying lumber at these prices.
Yeah. Yeah, I'm sure there are a lot of projects that are getting delayed or canceled. It definitely changes the economics when you go from $200 to $1,200.
Yeah, and $3 gasoline is really not popular out there in the real world. So we'll see how this all plays out. But that's how high prices cure high prices, and we'll see if it's a seismic event like we talk about, or is this thing going to be transitory? Because I think the Fed calls it transitory, and you know what that means? It's not transitory.
So, well, anything to keep an eye on for next week?
Weather, spring wheat, corn conditions. Absolutely.
Mm-hmm. So, all right. Well, that's all for this week's market update. For those of you who are Croptimize Pro subscribers, keep an eye out for our Croptimize Hedge Report to hear what insights the models delivered this week. If you're not yet a subscriber, you can learn more and sign up at thefarmcfo.com. We'll see you next week.